Well, good morning and welcome to the webinar. Today, the Individual Corner will discuss the American Rescue Plan and the individual market. And thank you everybody for joining us today. This has been a lot of fun over the past couple of years doing these trainings. I really enjoy doing this. Eric's on the line as well. So Eric, can you say hello to everybody?
Yep, good morning everybody.
Thank you. And just some housekeeping, let's get this out of the way. If you got a question, put it in the chat box to the right, in the question box, I should say, put it in the question box to the right, and we'll get to those questions at the end of the presentation. I know there will be a lot of questions. I also want to say if you're having issues with the sound or if there's a technical glitch or something like that, try to put that in the question box as well, and we'll try to address that as we go along. So here I am, and there's my phone number, my email address. I'm the lead account advisor here at Cornerstone, and this is my 15th year at Cornerstone. I love working here. Eric also works in the same role. Eric, you've been here for maybe 6 years?
It's coming up on 5. It's crazy.
Coming on 5, okay.
Yeah.
And it's been a blast, I'm telling you. So by all means, if you have a question about the individual market, processes, customer service, enrollment, issues, technology, markets, strategy, everything, give us a call and we'll go over that with you, especially now we've got so many changes afoot with the regulations. Let's talk about our incentive program. You'll find it on our website, www.crnstone.com, and $30,000 in cash prizes this year. The top qualifier gets $7,000, second place is $5,000, and it's all based on production. So individual ancillary, group medical, and group ancillary. And this is for all group and individual new business between January 1st of 2021 and December 31st of 2021. The top 15 qualifiers will earn cash with qualifications starting at 2,000 points. Let's talk about Autopilot. This is the referral program. Autopilot, we got this. So Autopilot is a compensation-based client referral program that offers the services of licensed reps to quote, enroll, support, and provide year-round service to your clients that may fall out of your business scope, but not out of your radar. Check it out on our website. We'll get you started. Stuff you can't address, you've got a full plate of stuff, let us help you. Okay. And let's talk about the Refer an Agent program. If you know another agent that might also benefit from these services, with our Refer an Agent program, you can refer individual and employee benefit market segment agents to Cornerstone and we'll pay you $250. So it's easy as 1, 2, 3. Submit your referral through our website. We'll track and monitor it. And then once your referral submits business, within that 6-month period, you earn $250. Okay, let's dive right into it. ARP, not AARP, but ARP is a new piece of legislation that was just rolled out in, the past week, 10 days. I mean, it was like the 12th or something like that, that it got signed, and it stands for the American Rescue Plan. So we want to look at it as new rules, new subsidies, and new sales opportunities. And just some background. So the full objective behind all this, all the stuff that's happened in the past 10, 12 weeks, the Affordable Care Act has been around for 8 years. So it's been around since, goodness gracious, 2014. And actually, it was implemented changes before that, but it's been around for at least 8 years. And in the past 4 years, there have been fewer and fewer people enrolling, which means more uninsured. And so the administration has unveiled 2 steps to address this. And A, it's reducing the uninsured, and B, it's improving affordability. And by their records, they think that 2.5 million people can be added. And I will say this, they instituted the new SEP back February 15th, and they've already enrolled over 200,000 people. Okay, and this is basically within a month. And in that same period last year, they had only enrolled about 75,000. So as a result of the SEP, which means a very liberal SEP, no documentation needed. That's the nature of this one. They've expanded the roles already. So it's a special SCP. It's not your traditional SCP. It's a special SCP. Okay. So let's talk about this. So reducing the uninsured, the new SCP started February 15th. Okay. And it's now extended to August 15th. That's right. And they announced this overnight that the SCP that we're talking about, this what I call the Biden Care SCP, has been extended to August 15th. Okay. So my public school math tells me that's 6 months, right? 6 months. And that's a pretty significant period. I was gobsmacked when I saw that last night. So it functions just like a normal OEP. Okay, so this is no different than what we encountered back in November, early December. So there's no documentation needed. You can apply the last day of the month for the first of the following month effective date. And like an OEP, you cannot be on Medicare or Medicaid eligible. I misspelled that. Medicaid eligible. Okay, you cannot be Medicare or Medicaid eligible. You're not eligible for a subsidy if you already have affordable group coverage, and you may switch plans and even carriers at that time. Okay, that's step one. Okay, the second part of this whole endeavor is improving the affordability. Okay, and the name of this, the real name for this affordability initiative is called the American Rescue Plan. That is what we're going to talk about at length today. So the American Rescue Plan was instituted March 12th, and it will lower premiums for most people who currently have marketplace health plans and will expand access to financial assistance for more consumers. I'm getting this verbatim from Medicare and Medicaid services. And under the AARP, under the ARP, many people who buy their own health insurance directly through the marketplace will become eligible to receive increased tax credits to reduce their premiums. So they're going to get an increase in their tax credits. They're going to get a bigger subsidy. Okay, so starting April 1st, consumers enrolling in the marketplace can take advantage of these increased savings and lower costs. What I mean by starting April 1st, they're going to be able to go out there and start quoting and enrolling, but it won't take place till May 1st. So the first time that they'll see a reduction in their premium will be May 1st. So premiums after these new savings are applied will on average be decreased by $50 per person or $85 per policy per month. So a significant reduction, and that's across the board. So they anticipate now 8 out of 10 people will get some kind of subsidy on the individual market. And we're just talking about the individual market. We're not talking about group. We're not talking about Medicare and Medicaid, just the individual market. And 4 out of 5 enrollees can find a plan for $10 or less after premium tax credits, and more than 50% can find a silver plan for less than $10. So actually, probably more than 8 out of 10 are going to be on a subsidy. Okay. If you have any questions, put them in the right question box, and we'll get to that at the end of the presentation. Let's talk about this in greater depth. We're talking about affordability, current versus new. What does this all mean? So under the current situation, this is the income subsidy table. So 2021 federal poverty level income levels. And, on the lower end, in Ohio, we've expanded Medicaid, so an individual somewhere around 18.5, something like that, that's when, they can start getting a significant subsidy on the income level. And that's the lower end. On the upper end is 400% of the federal poverty level. And someone making up to 51,000 can still get a subsidy. Okay, but if you were over 51,000, you were out of luck. You did not get a subsidy. You had to pay full freight. Okay, and then down here, so let's look at a family of four. So, roughly $39,000 for a family of four. They would be, getting a significant subsidy on the lower end of this. And we've all done the quotes and everything. And we know how that works. And then on the upper end, somebody making just under 105,000 could still get a subsidy, meaning somebody making 105 and above, okay, would not get a subsidy for a family of four. Okay. All right. These aren't exact numbers. These are within, a couple of dollars. They might change slightly from state to state, but essentially this is the current situation. And it meant that a lot of folks above the 400% poverty level, really your middle class, were left high and dry, weren't getting any help whatsoever on their health insurance premiums. And they figure that was a big reason why folks weren't signing up in the large numbers the past few years. That's the speculation there. So this law addresses that. Okay, and here's some more detail on this. Okay, this is when we're going to start talking about the percentage of income. So your percentage of income determines the premium as a percentage of your income determines what kind of subsidy you get. So ARP increases the amount of premium subsidy for all households 100% to 400%, and potentially for folks more than 400%. So the premium as a percentage of your income. So in the old regime, the lower end, 138% or so, they figured that you needed to pay about 2% of your income towards a benchmark silver plan. Now, under the ARP, you pay nothing. You get a free plan. And look, folks at or about the 150% level of premium as a percent of income, we're going to pay 4%. Now, under the ARP, starting May 1st, they get a free plan. 200% of the poverty level. Someone was expected to pay about 6.5% of their income towards insurance premium. And now that's going to be 2%. As you can tell, you're going to have significant savings. Okay. It even gets more dramatic. So someone at the 250% was expected to pay 8.3% of their income towards insurance premium. And now that's going to be cut in half to 4%. Okay, and you get the gist of this. But let's look at the folks at 400% and above. Okay, they didn't get any assistance whatsoever under the current law. So right now, as of today, they're paying full freight. Someone at 400% of the federal poverty level. And again, 51,000 is a cutoff for individual. It's about 61,000 for a family of two. It's about 78,000 for a family of three, and 104,000 for a family of four. Okay, those folks, and that is a huge percentage of our clientele. Those folks weren't getting any significant help on their insurance premium. They were getting nada. So now they're going to get some help. Okay, and let's illustrate that. No one will pay more than 8.5% of their income for the benchmark silver plan. And they have a term for this, those folks at the 400% poverty level. okay? The folks that were earning an income, a decent income, but that insurance product was so high. Think of Kentucky, their rates are really high, despite them being over 400%, even 450%, okay? They were getting, they were getting very little help on their health insurance, okay? Because, they had a magic formula that you had to pay about 9 or 10% of your income towards health insurance. But now they've reduced it, 8.5% of your income for everybody, despite where you fall on the federal poverty level. No one will pay more than 8.5% of their income towards a benchmark silver plan. Okay? And this is a good indication of where you're going to see deep impact. Okay? Nationwide. And folks in West Virginia and Wyoming, they're paying a ton for the health insurance. Okay? And this grid indicates the level of help, the severity of help, I guess, the impact that they're going to see on their insurance premiums. And the next slide will even go into more detail about that. But folks in Kentucky, folks in Ohio, I mean, I know we're kind of light blue, but still a significant savings in Ohio. And I'll show you on the next screen. But boy, folks in Wyoming, Louisiana, West Virginia, Kentucky, you're going to see significant savings as well. Okay, and to better illustrate what I was talking about here, here's the subsidy cliff. Okay, folks who didn't qualify for a subsidy because of this quirky system that we have now, folks just above that were paying upwards of 20% in most cases for a benchmark silver plan nationwide. Okay, they weren't paying 10%, they weren't paying 7%, they were paying 20% for a benchmark silver plan by the simple virtue of them being above the 400% poverty level. And that really, in large part, is the result of increased insurance premiums and health costs, really. What's driving health costs, drugs and new surgeries and wonder drugs and just the cost of healthcare. And that's really the culprit here, why you have a subsidy cliff, among other things. So again, the law is trying to address this, and this grid will really illustrate this. So these are scenarios for folks before and after, okay? What they're paying now and what they're paying potentially May 1st. So I'm Ohio male, age 50, their current subsidy is $179. Their benchmark silver plan, and this, there might be some variability from county to county, is about $328, which is a lot of money for an individual. And this is somebody getting a subsidy, folks. This is somebody at 325% of the FPL. So under the ARP, their subsidy increases by more than $100. Consequently, their premium is reduced by more than $100, and they get a 36% reduction. Okay, and this is somebody who is already getting a subsidy. Somebody already getting a subsidy. Okay. Kentucky. Okay. Current subsidy $385. Under the ARP, their subsidy increases to $501. Their current benchmark silver was $415. Now it's only $299. So Kentucky male age 50, and this is an illustration. Kentucky male age 50 sees a 28% reduction on their plan if they're at the 325% FPL, somebody with this income. Okay, now let's talk about somebody who's not getting a subsidy, a cliff dweller, family of 4. Okay, and this is for an Ohio family of 4. As I mentioned, they don't get a subsidy right now. And under the ARP, look at a significant subsidy, over $1,300. Right now, they're paying over $2,000 for a benchmark silver plan. Okay? They're paying over $2,000 a month for a benchmark silver plan. Okay? Annually, they're paying, what, $25,000 for a benchmark silver plan. That's just incredible. But under the ARP, the benchmark silver will go down to $751. Okay? They're not paying $20.92. They're going to pay $751. So they get a 64% reduction. Okay? And I will point out that they've started the advertisements already, and we're going to see more and more of this. I think they're going to target this aspect of it. This is going to be a real focus of all of this. And it means that we're going to have to get out in front of this. We're going to have to notify our clients of this and how it works and what they're going to need to do. Here's another tidbit. These enhanced subsidies will be retroactive to January 1st of 2021 and will extend through 2022. And as of today, okay, March 24th, they're slated to stop after 2022. So we'll see. How does it work? How are you going to take advantage of this? And the government's just not going to knock on your door and say, here's some money. So you have 2 options. You can take the subsidy now. I think most folks will do that. Starting April 1st, your clients can go and re-enroll in their current plan. And you'll do that on healthcare.gov. You'll do that on the enrollment tools like Health Sherpa, or the carrier sites have their own enrollment tools. I know Anthem does a good job with their enrollment tool. The cloud is another enrollment tool. There's some more out there. We prefer Sherpa. It represents about 40% of all enrollments, and they do a really good job, and they have a lot of functionality. And I can tell you more about Sherpa offline if you want to learn more about that. It's a free service, a free enrollment service. And Eric's a whiz with Health Sherpa. He's not chiming in, but we can discuss this a little more after we get done with the slideshow. What you can also do is claim it at tax time next year. You can just ignore taking the savings now and just have it recouped next year at tax time. I doubt many people will do that. Some will, but I think 99% of the people take their money up front. But you do have the option of just, if you're, on exchange already, and that's the key, of ignoring this and just recouping it next year at tax time. Okay, remember, the subsidy is nothing more than an advance premium tax credit. The subsidy acts as an advance premium tax credit. But wait, you said the subsidies will be retroactive to January 1st. I said that. That's correct. That is absolutely correct. How will that work? Okay, 5 months into it. Okay. So how do you recoup the subsidy that you're owed for the first 5 months? So the January through April 2021 APTCs are to be amended at tax time next year. So these again are for folks who are already on exchange and have been since January 1st. Okay. They can recoup that segment, that period, at tax time next year. And for those who are not adjusting your subsidy now, they can adjust their full year's APTC at tax time next year. So, again, I doubt many people will do this, but they can recoup the full amount next year. But you got to be on exchange. You got to be on exchange. And this slide addresses this. Will off-exchange clients be able to get these tax subsidies, these new subsidies? No. The answer is no. So if you're grandfathered, if you're off-exchange, if you're not on the marketplace, you're not eligible for these subsidies. So those folks that are slated to get, those folks that are, potentially eligible for these subsidies, they need to apply on the FFM to get these. There's no other way around it. And then the obvious question is, what about those people who are off exchange now, who become on exchange May 1st? Aren't they entitled for a 5-month subsidy? That's my big question. That's a question nobody's answered for me. Again, we're less than 2 weeks old with this law, and I think there's a lot of things that haven't been addressed. But that's a huge one for me. If you are off exchange now and you go on exchange May 1st, are they going to let you claw back some money? And at this stage, I'm going to say no, but I clearly understand your concern and the interest in doing that. But I will update you throughout the year on this, and by all means, we're going to do more of these. We're going to do at least one more of these updates, one of these catch-up sessions, because the law is changing, and this is something we need to get out in front of. Okay? Here's another aspect of the law. Okay? The ARP, subsidy guarantees for people in unemployment. So APTC guarantees, subsidy guarantees for enrollees receiving unemployment compensation. Okay? And again, this is straight from CMS. This is straight from the government. And with the ARP, households receiving unemployment compensation will qualify for subsidies, even if their income is 130%, as if their income is 133% of FPL. Okay? And you can be on unemployment for a very short period of time, but you'll still qualify for this. Okay? And this means enrollees receiving unemployment will be eligible for a silver plan with a zero premium cost and significant cost sharing reductions. Not a lot of details on the implementation of this. And last night, in that blast that came out, they touched on this and they said these subsidy dollars probably won't be available till the summer. So they're encouraging people to apply for it now, starting April 1st, but I don't think the money will be available until later this year. And I'm sure I'm going to get a lot of questions on this. I have a lot of questions about it. In Ohio, we've expanded Medicaid. So the lower end of the subsidy is 138. So 133 means nothing to me. 133 puts you in Medicaid. They wrote this law to encompass everybody in the country. States that didn't expand Medicaid and states that did expand Medicaid. But in Ohio, and the majority of our reps on the call are in Ohio, we're concerned about the 138% FPL. So my take on it is the unemployed, the people that got unemployment, they'll be slaughtered at 138, okay? And the intention is not to put them on Medicaid if they're not eligible for Medicaid. Traditionally have not been eligible for Medicaid. So yeah, there's some mental gymnastics afoot here. But let's keep going. Things to be aware of, more stuff about the law, okay? Changes to taxation for 2020. If you claimed unemployment in 2020, you can now exempt up to $10,000 of that income on your 2020 taxes. So just in the past week or so, people have been asking me about unemployment during that first COVID period of last spring, et cetera. And there's been multiple changes to that. We weren't really clear if you claim that on your income or not, but the law states now that if you claimed unemployment in 2020, you can now exempt up to $10,000 of that income. I know this is for wage earners below $150,000. So keep that in mind. But the next thing is for the 2020 tax year only, taxpayers who underestimated their income, you heard me right, taxpayers who underestimated their income won't have to pay back the excess subsidy. That's correct. And this just in, the filing deadline for your 2020 taxes has been pushed back to May 17th. Hooray! Or boo. If you're an accountant, you're probably saying boo. What the law does not address, it doesn't fully address the Medicaid ACA income cap. And this has more to do with the states that did not expand Medicaid. In other words, you make too much for Medicaid, but too little for the ACA. The ACA subsidy threshold. But we found that the Medicaid ACA gap also occurs in Ohio, and I can give you an example of that. The law does not address the Obamacare family glitch, okay? And this is one of my bones of contention. So the Obamacare family glitch happens when an employer coverage that is affordable to the employee is not affordable to his dependents. The benchmark, the test that they use for group affordability is just on the employee. 9.85% of his income, her income. Premium's got to be below that, okay? In order for them to get, eligibility on the ACA, okay? But it doesn't address the oftentimes high premium his wife and kids or her husband and kids pay on their premium. So that's called the Obamacare glitch. We find a lot of families in this. So the law does not address that. It might in the coming weeks. What does this mean for the agent? Okay. Let's draw up your play. So in the spirit of March Madness, let's game plan what the agent's going to do here. Okay, how do we take advantage of this opportunity? It's going to be a great opportunity for many client segments. Okay, and here's how I look at it. The uninsured prospect, there are millions of them. Okay, and as we saw, we almost saw a threefold increase in uninsureds applying in the past month. Enrollments are way up. Existing on-exchange clients, okay, who are going to see a major increase in their subsidy. Off-exchange clients, who are now going to see a huge subsidy available to them. Grandfather clients, too. Grandmothered, there's over 100,000 in Ohio. Okay, but now they might be eligible for a significant subsidy. You're in front of folks. Okay, it's such an easy thing to do. Cross-sell ancillary, that's dental and vision, and critical illness. And when we talk about things like critical illness and accident, I want to emphasize that these are Obamacare plans we're working with now. They all have very high deductibles. And that's where you bring up the conversation about critical illness and supplemental accident to help fill in those gaps. And, we're all familiar with gotcha, surprise billing, high deductible plans, high copays, all that kind of stuff, okay, that are endemic to the ACA plans. This is how they're built. It's important to bring up the topic of gap fillers like supplemental and critical illness. Okay, it's about 6 after the hour, and we'll keep moving. So by the numbers, 2.5 million can be added nationwide, between 75,000 and 90,000 in Ohio. Okay, we've got 6 months now, not 3 months, 6 months. Okay, so what we're basically talking about is OEP almost happening year round. So people always complained, or I shouldn't say complained, but always were frustrated by the fact that individual OEP and Medicare AEP are on top of each other, and there was just no way to separate the two, no way to really get in front of all your individual clients. Okay, but now you can. Now you can step back and strategize a little better and do more of those drip marketing campaigns, more elaborate marketing to address some of these uninsured and underinsured and, insurance poor. There's so many different things. Getting back to the on-exchange clients, I know, the objective here, is to kind of address their needs, but also use this as an opportunity to maybe moving them to a different carrier if the provider network is better. Think about moving them to a different carrier, based on, premium dollars, or, how the plan works, that kind of thing, all the features of the plan. And I can go to greater detail about these plans and help you out. Okay, let me just look at some of the questions and see if anything's popped up yet. We've got a lot of questions. Okay. I'm going to get to these in a moment. Thank you for including your questions. I really appreciate it. Existing on-exchange clients. How does this work? Okay. Devil's in the details. What's the mechanism for these on-exchange clients, these current clients, to now get an improved subsidy? You need to reach out to your clients to avoid them. What you're going to do is re-enroll these on-exchange clients on the tools that I described earlier: Health Sherpa, the Health Insurance Marketplace, which is called healthcare.gov, or the carrier websites, Anthem, Oscar, etc. And you're just going to have to re-enroll them. And I'm told you do that through authorizing a life change. So doing a life change, and that's essentially what you'll do. And then you'll go out and select a new plan. Or just what you'll do is re-input your subsidy information. Granted, that's a pain, but you're going to need to reach out to these members to avoid them going elsewhere or blaming you for missing out. Okay, you're going to see a lot of advertisements in the next coming weeks. You're going to see a lot of stuff on Facebook, a lot of stuff on the internet, talking about these changes, and you want to be first to your client. You want to make sure they know about it from you instead of somebody else. And the other thing we need to do with these enrollments is make sure that when you do enroll them on healthcare.gov or Sherpa or the carrier website, that your NPN is attached. Okay. In the best case scenario, your NPN does get attached in these enrollments. That happens the vast majority of the time, but there are cases where they don't get attached. and they get lost in the shuffle. We've all been there. We all know this. Every OEP I go through lists and lists of clients that for whatever reason didn't get attached. Maybe they inadvertently went on healthcare.gov themselves and enrolled instead of the link that you gave them. So we need to track the fidelity of their enrollment. And where this starts is at the carrier book of business. You need to go to the carrier book of business and cross-check your current book with, what happens after May 1st. Okay, granted, that's a pain. But I want to look at this as an opportunity. So you got a lot on your plate. How do we reduce the time and effort involved in outreach to the clients? Emails. So sending an email. As things stand, most agents are doing quarterly outreach to their clients. It could be for individual, it could be for other stuff. Okay, you might have their P&C, you might have their investments or something like that. You're doing multiple touches with your clients throughout the year. So here's a great opportunity to get in front of your clients again with some really impactful news that they're not going to ignore. So you're going to get their attention with an email devoted to this topic. So they're going to read these emails. And like I said, you can end up putting them with a new carrier, which means new commission. Okay? So they have friends and family. This is a great referral opportunity. This is new information. This is groundbreaking. This is so important, and you want to be that source of information. Okay? I hear it all the time from agents, particularly Medicare agents, during November AEP. I'm trying to get in front of my agents, but they're on TV. They're watching TV and they see Joe Theismann or Joe Namath or somebody pitching some plan that they never heard of, and they're asking questions about it. And they come to me, and I've never heard of this thing, and whatever. So if you beat them to the punch, okay, if you get out in front of this, in front of the media tsunami, your clients will be at ease and they'll feel confident moving forward. And again, there's going to be a lot of hype behind this. We've already seen the ads, and this will make your prospecting easier. Okay. And the other focus is off exchange and grant for the clients. For our agents at Cornerstone, this will be a target audience. Please mine your book for these clients, and they need to be enrolled on exchange to take advantage. Okay. And they don't need to wait until the fall. Okay. Okay. If you're not certified on the FFM, we can help you start the process. Okay, it's worth doing. It's worth doing. It's not painful. It's a lot easier than AHIP, believe me. It's pretty straightforward. It's not that hard, and we can walk you through the process. And if the FFM is not for you, we can help you find an alternative. And we alluded to that earlier with the autopilot program. And we have a lot of agents who use that specifically for the on-exchange world, okay? So let us help you out. Let us help you out. Let's get to the questions. And again, thank you. Thank you, thank you, thank you for staying put and staying attentive and sticking with me. Kind of a challenging, very abrupt topic today. Okay, so the first question. Do you have to have a continuous SCP throughout August or only one change? And you can change multiple times. I mean, this is going to work just like OEP. So I always reference OEP. That's traditionally the 6-week period, November 1st through December 15th. We're all aware of it. It's just kind of like a free-for-all. You don't need documentation. You can apply multiple times. All the government cares about is the last app. Okay, the last app. So the last app wins. Last in, last out. So yeah, I mean, clients will make multiple changes. Okay. What I am concerned about is people making a change like May 1st, okay, for May 1st. And they like that plan. And they try to go in July 1st and make another change. I would avoid that at all costs. And I'm not even sure if the system will allow it. But I would try to avoid that at all costs, considering all the machinations going on. So technically, they should be able to do that throughout, but the government hasn't really addressed that. So initially, the hard stop was May 15th. Now they're going to extend this throughout the summer, and I would try to avoid multiple changes throughout. That'll really screw up the billing. And right now, they have a daunting task just to keep this new billing regime intact. So next question, you said quoting begins April 1st with effective date of May 1st. Yeah, that's right. The screen showed an effective date of April 1st. That was incorrect. We'll correct that for what we send out. The effective date, the first effective date, everybody, is May 1st. You will be able to start quoting April 1st with an effective date of May 1st. And thanks for catching that. No new premiums, no new start date of April 1st. It's just start of quoting. Does no documentation mean the marketplace will not ask for proof of income and will accept income estimate from the consumer? That's a very good point. What I was referencing to documentation was more or less the loss of coverage documentation. That's what I meant by that, the loss of coverage documentation. The government always asks for proof of income if they need it. Now, the government, 9 times out of 10, will pull it from IRS, but sometimes they will require documentation. They will always ask that if they need that. Slides will be available of this presentation, and slides will be available. Actually, I'll include links of Health Sherpa's broker notice. I'm going to include a bunch of other stuff on here. A link to the Kaiser quoting tool. Okay, the Kaiser quoting tool is a shadow quoting tool. It's just like the healthcare.gov website. It's a great tool. It shows before and after as well. More questions. Will someone on a bronze plan get a subsidy, or is it limited to a benchmark silver and above? No, sure. Somebody on a bronze can still get a subsidy. In many cases, they'll get a 0 premium plan. So in many cases, a bronze will be a viable option for someone. Okay, particularly someone on that upper range of FTL. Okay, they're paying a lot already, and they're going to see their premium chopped in half maybe. And if bronze plan is more suitable, I mean, there's HSAs on the bronze level, still go to bronze. Okay, they really talk about the benchmark silver, I think, too much, but this will also affect the bronze. Next question: a single person with adjusted gross income of $85,000, will that person get the 8.5 subsidy? That's a great point. I mean, crank through the numbers, you'll just have to see. I imagine in a place like Wyoming, yes, they could get a subsidy. For my illustration, I used a family, at 405% of the FTL. It's quite possible that a single person at 85,000, depending on state they live in, could get a subsidy. Remember, they're not so much considered about the percentage of FPL now. It's about the 8.5% of the premium as a percentage of your income. Can you explain how the retro will work? Will everyone just get a tax credit at the end of the year? Yeah, that's how this mechanism will work. So January 1st through the end of April, how are you going to take advantage of that? You'll have to claw that back at tax time. And again, you need to be on exchange, okay? If they're going to let the on exchange folks take part in that, I'll let you know, but I can't speculate on that right now. We got more questions. I don't want to go over, but I'll keep rolling on here. It's about 22 after, and thank you for all your questions. It's been a great presentation, great engagement, and I really enjoy you guys joining us. For clients that we knew income was higher and we didn't even ask for assistance on the application, do we know what will work when we process this ARP change? Again, I'm going to send you some tools. The Kaiser Family Foundation tool, which allows you to quote now and quote for plans effective May 1st. It'll show you the before and after. So this is not going to work for everybody. You know, there are still going to be a lot of clients that don't enjoy savings, and that's going to be on the upper income levels, et cetera. You know, another area where I think you might not see help are very young folks who they're making a decent income, you know, making, you know, 51,000 plus, and you know, just as a fact of life, you know, their premium is pretty low. So this law is really trying to address the high cost of premium, high cost of insurance for the upper age levels. Okay. Next question. Yeah, in that's right. This is for a client they processed on exchange, right? This is all about on exchange. So that's, you know, the inconvenient truth here. We need to be on exchange in order to take advantage of these subsidies. And again, if you're on Medicaid, Medicare, or affordable group coverage, just like in the past, you can't get the ACA subsidy plan, okay? I was told, since it is open enrollment, off exchange can apply on healthcare.gov. Yes, that's absolutely correct. And this will get them a subsidy, potentially. Absolutely correct. Yeah, so off exchange, you know, I've been screaming from the rooftops since February 15th. Let's have your off exchange folks, your grandfather folks, look at this again. There's no qualifying event required. Great, more questions, more questions, more questions. And have you heard if there's anything in the works to help spouses and dependents of people who have employed-sponsored insurance? A lot of employer-sponsored health plans do not contribute towards those spouse-dependent premiums. If they do, it's not a lot. That is the classic Obamacare glitch that I talked about earlier. And the screen just froze. I'm sorry about that. Yeah, so everybody will get a copy of these slides. Thank you, Jennifer. And okay, here's a deep dive into the family glitch. This is a question, graduate level question. The family glitch. Can't anyone just put the wife and kids on an ACA plan and let the employee stay on a group plan? That's a really good question. That is a group-related question, and I am going to say no, because group is being offered to that client. So that, wife and kids are being offered group, and it's deemed affordable. Granted, it's only affordable to the employee. So this is the classic conundrum with the Obamacare family glitch. You can't put the wife and kids on a subsidized ACA plan. You can put them on a non-subsidized ACA plan. If it's cheap enough, sometimes that works. But I'll try to include some information on the Obamacare family glitch. And I have a feeling they're going to try to address that. It's a glaring omission of this law, let me tell you. If you switch grandfather plans to a subsidy, they could be worse off in 2022 when this ends. That is correct. I don't have a crystal ball of what 2022 will look like. And that was pretty alarming when they said that. So I think they're just hammering stuff through Congress, and they have lots of loose ends. Can they change metal plans? Absolutely. So that's going to be a big aspect of the re-enrollment is, bronze folks, bronze clients will be able to re-enroll and maybe get a silver plan for the same cost or less, in fact. And you'll go in there and you go onto the websites, and there'll be a mechanism for you to change plans, whether it be through report a life change or through the change plan button. It depends from enrollment tool to enrollment tool. And we'll have more guidance on each individual enrollment tool that we use and we're familiar with on how that'll work. So they will be able to take advantage of this, no questions. What will happen in November? Will new plans and open enrollment start again? Yeah, that's a great question. Considering all that's changed right now, I have a feeling that the OEP in November will be expanded, will look a little different than the last OEP, and absolutely new plans and open enrollment will start again. They will have a whole new slate of plans available then. And we'll have new carriers. We'll have new carriers starting next year too. So we'll have more plan options for you next year. Okay? Okay? All right. If they're getting their extra subsidy at the end of the year, if they change nothing, are they actually missing out? More of a savings delay. Okay, I want to read into this a little bit. If they're getting their subsidy, their extra subsidy at the end of the year, so at tax time next year, I guess, they're just squaring it up on the taxes next year. No, so they're on exchange. They're on exchange. They do nothing. And the way it reads now is they will be able to make that full amendment at tax time next year and enjoy the same level of subsidy savings as they would if they did the change now. So there would be a mechanism on your taxes to recoup that at the end of the year. Again, I think only 1 or 2% of the people actually do it that way, but they will be able to enjoy the same amount of advanced premium tax credit, either scenario. Take it now or take it later. And I just want to verify that the subsidy that is available to those who have unemployment will not be available if those unemployed people have coverage available to them through their spouse's affordable employer plan? That's a great question. I'm going to have to answer that offline. So again, the question was, want to verify that the subsidy available to the unemployed will not be available if those unemployed people have coverage available to them through their spouse's affordable employer plan. That is a great question. That's another one that they didn't really address in the information. But I'll have to get that to that offline. I'll have to give you my best guess. Great questions. Another question, will the credit be given to deductible if same carrier but a different plan? Yeah. So I get this. This is a great question, and I've asked my team about this, and I've asked several carriers about this. I think you're asking about credit for deductible. The answer is yes and no. The answer is yes and no. It's deductible, accrued deductible credit. I know some carriers are going to give you deductible credit. For example, Ambetter states that they will, give you credit for your accrued deductible on your bronze plan if you move to a silver plan May 1st. But some others are not. And, I think Molina, for their part, said that if you move from metal level to metal level, the deductible will reset. And I think that was the case with some other carriers too. So we're going to have more data on that as well. Just kind of game plan which carriers are allowing deductible carryover. My hope is that with it being so early in the year, there hasn't been a tremendous amount of deductible accrued, and there's still consideration. You're going to save a ton in premium when you change. And there are going to be some counties where, there's only one carrier available, and they're not going to do deductible carryover. It's still a good idea. So we'll have more detail on that. What about the COBRA subsidy? I knew someone was going to ask about COBRA. So COBRA subsidy. So this is something more of a group question, but it certainly plays into things. They've announced that folks on COBRA, are going to have that zeroed out. They're going to have the COBRA paid for a period of time until the end of September. And I'm really relying on the group folks to answer a lot of these questions, but I can certainly do the best I can. What about the COBRA subsidy? If it is a free market plan, if you're offered COBRA or a free COBRA plan. Again, if you're on affordable group coverage, that would include COBRA. You've elected COBRA. The ACA won't let you apply for a subsidy. So if you're on the COBRA and it's affordable, the ACA won't let you get on that plan. And I apologize that I'm not an expert on COBRA, but your group person in Toledo office will have more detail on that. Okay, and we're going to wrap things up in a little bit. We went over, I'm sorry. I'll try to do the best I can here. Deductibles will restart, and again, my answer to that was yes and no. Depends on the carrier. And the other question was, I didn't understand the August 1st date. It's actually August 15th. Yes, the SEP period did change, and that was announced overnight. So August 15th is the end of the SEP. We will offer a refresher on Sherpa. That's the next question. If the wife and kids are not affordable, and they pay all the premium, will they get a subsidy? Just depends on the affordability. Okay, that's the next question. Some folks have hung around afterwards, and so I'm going to get to those right now. I've heard that there are carriers who do not pay commission for mid-year changes, if that is true. That is true. And if so, do you know which, and can you share which one? So I know in Ohio, unfortunately, Anthem does not pay SEP premium, and that would still apply to this. What they're doing is offering a bonus program. So I don't have exact figures, but I think after 10 enrollees, you start getting paid $100 per enrollee. So it is good compensation. I'm not going to say it's full-blown commission, but it is good compensation. But you got to meet that threshold of, I believe, 10 employees. Or I'm sorry, 10 enrollees. Okay. And the last question, will you provide guidelines by carrier which ones do and don't have deductible carryover from one plan to another? I will. We're still hashing out those details, and I really appreciate all your questions, everybody. I'm sorry that I went over. Really, really good stuff. Really, groundbreaking information. And everybody will get a copy of this presentation. I'm going to conclude the show right now. Eric, if you're still on the presentation, say hello.
Yep, still here, Geoff. Great job.
He's still here. Okay. And thank you, Christina. Yeah. I enjoy all your feedback, everybody. Thank you, Margie. Thank you, Steve. Thank you, everybody. Enjoy all the feedback. You're why we work so hard, and you're why, we're the best GA in Ohio, in my belief. The brokers are what makes it happen. And a big shout out to Geoff Larkin, our amazing marketing director, who put all this together for us. And stay tuned. We'll have more information for you. With that, I'll conclude the presentation.